Martin, thanks very much for joining us. It would be good to get your perspective, I think, particularly on the sort of financing debt markets, also looking at that borrower's perspective on where the changes have been in terms of the market and where you see us heading for 2022.
Well, I think the changes in the market have been that we see much more players, and to find the right financing partners is getting more difficult. So from borrower's perspective, you need to find the right structure and the right partners. While the traditional lenders are focusing on top quality product, and if it doesn't tick all the boxes, they don't do it at all. And therefore, it's important to think about alternative financing strategies, a combination of mezzanine, whole loan providers, and of course also different sources of that financing. And I think that will continue in next couple of years as the total environment is getting more diverse.
And from your perspective, Martin, what are you seeing, I suppose, in terms of the bank lending side? Are you seeing them stepping away? What's your from particular assets? What's your sense of that?
Well, obviously, there have been asset classes that have been hit by COVID. So hospitality is problem right now, but from my perspective, if you have the right product, probably would be a good idea to invest into it right now because that will recover at some point. But the banks are quite hesitant as far as that one is concerned. And of course, in the retail space, all that is not food anchored is an issue. So to finance shopping centers with a non-food anchor or high street retail where you have no food component is quite challenging. But the banks are overall doing same level of business they did before, more or less. And the ESG issues will have an impact on what type of product will be financeable or will be preferably financed. So that's what we're seeing right now, that the traditional lenders are preparing for these also regulatory requirements.
And interestingly, on that ESG side, Martin, I suppose, how do you see that going forward? Do you think there's a risk of a number of stranded assets and those kinds of things in the German market?
Well, currently, it's between 75 and 85% assets that are non-ESG compliant. So, of course, something will be done with them. There will be better technologies, and there will be also investors taking care of them. But, of course, there will be stranded assets. And the question is what to do with them. So, from a climate perspective, it doesn't make sense to tear them down and do a new development because that, of course, is the worst you can do. So the challenge will be to find ways to improve the asset to an extent that they will be, let's say, from an ESG perspective, acceptable. So I think that will be an opportunity for investors, but also for lenders who will support these type of investments.
In terms of pricing, I suppose, what are you seeing in terms of assets here? Do assets have to tick every box in order to be financed by banks? What's the situation at the moment?
Well, currently, the traditional German lenders have become more selective. So they focus on what they perceive as core, what ticks all the boxes. But obviously that's just a portion of the market, not a very small, but there are many assets that obviously don't meet those criteria. And of course, these assets are financed as well. So that is what I meant with my first remark, that from an investor's perspective, it is critical to find the right financing structure and the right partners. And if a traditional bank says, I don't like the asset because it doesn't tick all the boxes, maybe different situation if you talk to a private debt fund or potentially also to a family office as a financing partner.
Great. And I suppose, what's your overall kind of view on the big trend that you see for 2022 and going forward?
The demand for German real estate is high and will remain high. So we'll see high investment volumes this year and also next year. and therefore we'll also see high financing volumes. The trend simply will be to define and identify the right strategies, and I don't expect that there will be a massive change in the priorities of lenders. Of course, assuming that the overall economy will stay stable. There is, of course, a certain risk that we'll have an overall economic decline, probably following some events in China, what have you, and that of course would also have an impact on the real estate market and the financing market.
Great, thanks very much for joining us, Martin.
My pleasure, thank you.